Okay, today I want to talk about our number one chart pattern technical indicator. We used this indicator recently to find ANAC, which has been one of the top trades this year for us and any trader out there really. It's made a huge move this year, and it's been one of the top performing stocks. I'm going to share with you um, one of the ways we found the stock, one of the things we noticed about it that made us like it a lot more as a trading setup. And so I'm going to do that today. I just want to point out that I am Brian Neal, founder of Tradetobefree.com and InvestBefree.com, and I've been trading for about 12 years now. And I've been writing the weekly and daily alert newsletter on my site, Tradetobefree.com, since late 2004. And I also want to point out that I'm a member of the Better Business Bureau, and we have been since 2006. We have an A+ rating with them. And also wanted to point out that we do use these same techniques I'm going to show you in these videos in our own trading. Okay, so without any further ado, let's go to the next slide. Okay, so what is it? What's number one indicator? Well, it's number one pattern, I should say. Well, it's not the bull flag pattern. Okay, a lot of people like that. It's a very bullish pattern, and it's a great one to look for. It's not a cup with handle pattern. It's a very popular one and occurs often in the market. It's not a double bottom pattern. We trade those sometimes as well. It's not even the MACD or a candlestick pattern. And here's a hint for you. It's a trick question. Okay, you got it? Well, here it is. Okay, the best chart pattern and technical indicator for us is actually a combination of two or more of the top technical patterns. Okay, so not one bullish pattern if we're looking for a long trade, but actually finding two bullish patterns on the same chart. Okay, and that is a great combination when you can find two or three of those on the same chart. Now, why does this work? Why do we look for these patterns? Because different traders out there look for different patterns. Okay, and so if you have more than one bullish pattern or the same bullish pattern but on different time frames, sometimes you'll see a cup with handle on a weekly pattern, for instance, and then there'll be a second cup with handle and within the handle of the larger pattern. And I'll illustrate this here in a minute. But you can have the same pattern twice within the same stock chart for a stock, okay? And some traders out there are looking for that pattern on a daily chart. Some are looking for it on a 10-minute chart, and some are looking for it on a weekly chart. You know, we generally look for it on a weekly chart, but different traders look for different patterns. Might be a candlestick pattern too that they're looking for. But the more patterns you find on a chart that are bullish, the more traders are attracted to that stock and that trade, and the better chance of success. And that's what we found in our own trading. And we find quite a few of these trades throughout the year. We have more than one pattern, and they often work very well. And I'm going to show you a great example in this video. Okay. But first, I wanted to point out again that one you'll find probably most often is a cup with handle, a larger cup with handle, with a smaller cup with handle pattern within the handle of the pattern. If you look closely for those type of setups, you'll find them, and it's a great way to pinpoint a better entry on that pattern, because for most traders, or for actually all traders, that pattern has different entry points. Some people buy when the downtrend within the handle has been broken. Some people want to buy when the resistance in the handle is broken. There's different entry points that people choose for that pattern. They're all fairly similar at similar points within the chart pattern. But if you find a cup with handle on a daily chart or 10-minute chart close to the entry point on the weekly chart, that can help you better time the entry for that pattern. So let's just give you one example. But I also want to show you an example from a recent trading setup that we featured to our customers on our site, Tradetobefree.com. And let me pull that up here. And okay, here it is. And what this is Anacor Pharmaceuticals again. It's one I mentioned before in the beginning, and it's ANAC, the ticker symbol. We found this stock breaking out of a cup with handle on a daily chart back in late May, and we featured it. Excuse me, I have to clear my throat. We featured it just as it was breaking out of this pattern, but you'll notice there is a second pattern within this larger pattern. And the second pattern that I wanted to point out is the long-term uptrend. We see a swing trading pattern or a channeling stock pattern where you have this channel that's going back actually 6 months or 3 or 4 months to the left of this chart, I believe it was. It's been an uptrend for quite some time and in this uptrend channel. Okay, so that's a bullish pattern right there. You've got the cup with handle right here where the stock is peaking in mid-April, coming down and then sweeping around to form the cup portion of the handle here. And then the handle, or the cup portion of the pattern, and then it goes sideways over here to form the handle of the pattern. And if you look closely, you can also almost see a small cup with handle pattern on a daily chart again, and probably can see it better on a weekly chart, although I haven't confirmed that. But yeah, so there's two patterns going on here. The stock also had rapidly improving fundamentals. All the stocks that we feature on our site to our customers have the fundamental momentum to support the higher price, and that's key. I believe in trading when you try to find great trading setups and looking to make a lot of money. But you can see how the stock broke out and how it made a huge move within 2 months. And we hit our first target fairly quickly on the stock, and we decided to keep it because it had formed a second pattern, which is a flat base pattern. You can see that here starting in early June to the middle part of June. That's a flat base pattern. It broke out of that, and then it formed another small cup with handle pattern. And as this is going on, the fundamentals are continuing to be steady or improve in terms of earnings estimate revisions and beating estimates and sales growth and earnings growth, which are key. Okay, and then it breaks out of that smaller pattern here, and then it really takes off over the next couple weeks or so. So you've got a few patterns, bullish patterns going on here, and you could have jumped in on these breakouts and rode the stock as long as it rode or continued above this uptrend here that I drew on the chart originally, or you could have drawn a line here to signify this shorter term uptrend here by connecting these three lows in the trend and seeing that the stock was still well above that uptrend support as well. So in our book we talk about how you can keep a good portion of your shares, as long as the stock is trading above that uptrend support that we defined on this chart for our subscribers and for ourselves too. And we actually made a ton of money here within a couple months on the stock. So that is a great example of one of the best trades of the year of any trader, really, without getting into dangerous penny stocks or risky options. This is just stock with real results, real sales growth, real numbers that they're producing, quarter after quarter, and those are the kind of stocks that we focus in on and notify subscribers when we find a trading setup like that with all those positive factors. Okay, so that's a great example of multiple patterns, multiple bullish patterns, and you can also find this on bearish setups too. If you want to go short or buy and sell put options, you can also find 2 or more bearish patterns oftentimes in a chart. Not all the time, you have to be on the lookout for them, but if you look at a lot of charts every week like we do, you'll find these patterns throughout the month. Okay, a few things I want to point out about this, though, is that first of all, excuse me, as with all bullish momentum patterns like flat base patterns and cup with handle patterns, these patterns work during market uptrends, and they'll quit working once you see what we call a bearish confirmation signal in the market. When you see bearish signs in the overall market, they'll quit working as well, and they definitely don't work in bear markets. The bullish ones don't, anyways. The bearish ones will, but not the bullish ones. Okay, so you want to keep that in mind. And it's important to have a significant uptrend leading into the pattern. So you don't want to see these bullish patterns, these multiple bullish patterns, in a stock that you like a lot, that's been in a downtrend for a long time and is finally starting to turn around. If you're really good at fundamental analysis and figuring out where the big money is going to go to, which industry the big money is going into in the near future, great. But everyone wants to buy low and sell high in a trade, but really you have to buy low, but buy low within a strong uptrend that's lasted for a long time. Okay, not for a month or two or three, but for several months or more. So you want to see a good strong uptrend leading into the pattern, the multiple patterns. Okay, and wanted to point out too that at least one of the patterns should be well formed. So you want to see, for instance, in a handle within a cup with handle, you want to see low volatility. You want to see the volume trailing off. You don't want to see the trend within the handle moving upward. If that's the case, it hasn't gone into the handle yet, really, or it's just a bad pattern. You want to make sure you understand each of the patterns and know what a well-formed pattern is, and I'll have other videos coming out soon about that, and also you can learn more about that on our site when you take a free trial of our newsletter. You'll learn more about that, and also on our blog, which has a lot of very interesting stuff. And also want to point out too that these patterns work best with stocks with rapidly improving fundamentals. Our philosophy is if the fundamentals aren't improving enough to support the higher move, then the move is faulty and is more prone to failure. And it's kind of common sense, but sometimes traders get too engrossed in technical analysis to realize that, hey, the stock is going to have the fundamentals behind it at some point to support the higher price, or it's more prone to turn over on you. So we focus just on the stocks with the rising estimates that are beating those estimates. Okay, stocks with very strong earnings and sales growth for a number of years. Stocks with key fundamental metrics that are improving quickly. Okay, and like I said, there's more great information about multiple patterns and other great chart patterns on our blog at Tradetobefree.com. You can get a free trial to our premium newsletter on that site, and if you look in the comment section below, you can get a link to that free trial. We also sell a book on the site on how to find and swing trade elite stocks, and you can also learn more too about how we need to go bearish. Actually, in early August this year, before the market really dropped in August, and how we knew to go bearish just before the major sell-offs over the past 10 years. In our newsletter, you can learn more about how we execute our market analysis in that same book. So check that out too on our site if you're interested. And again, there's more great videos on our YouTube channel and more information on the blog. So hope that helps you find more great trading steps this year. And thanks for listening, and I'll talk to you soon.